Number 1, move your money to a high-yield savings account. This step is not going to make you rich, but it's better than you blowing your money on some ugly shirt. If you take that $1,000 and you don't spend it, instead you move it to a high-yield savings account. These are banks that are paying out higher rates of interest. Let's call it 3 to 4% a year in interest. Now what you're doing is, number 1, you're not spending the money, because if you go out and you buy an ugly shirt, and we can call it a shirt, we can call it a vacation, we can call it a car, we can call it a fancy night out, all this money does is go away. Because once you spend the money is gone, you're not gonna get it back. Now what we're doing is we're not spending the money, moving it to a high yield savings account where at least you earn something. We'll call it 3 to 4% a year, which is not a lot of money. Okay, I'm not saying this is gonna make you rich, but we're talking about $30 to $40 a year for doing nothing except moving this money to a high-yield savings account, which is a bank account. Make sure it's FDIC insured. Make sure it's a legitimate bank, because there's a lot of crap out there. But now at least you're earning something as a way to get started. Number 2, invest that $1,000 into your own education by reading books. Let me show you how you can get an MBA level education at the fraction of the cost of getting a real MBA. If you go out and read 5 books on money management, then you read 5 books on personal development, then you read 5 books on successful people and their biographies, then you read 5 books on leadership and or sales, and then you read 5 books on how to start a business, you are going to get a wealth of knowledge, an MBA level of education at the fraction of the price. And now what you can do is you can start learning, that way you can start earning. See, the mistake that some people make is they just want to go out and earn money. But I think it was Rich Dad, Poor Dad's author, Robert Kiyosaki, who said you want to learn before you can earn. Because once you know how to learn, well, now you can earn a whole lot more money, and you can take the $1,000 and start investing it in your knowledge. That way you can start earning some more money as well. Now, if you say, well, Jaspreet, what should I buy? Read whatever you want. Go to Amazon, find 5 books that have the top ratings, top reviews in each one of these, and go out and read whichever sounds most interesting to you. There's a ton of books out there. Start reading, and once you start reading, you'll start learning, and you'll start seeing what you're more interested in, and you will open up your mind to a whole new world of possibilities. This is what changed my life, because I didn't grow up learning about money. I grew up in a very traditional immigrant household. My parents are immigrants from a state in India called Punjab. They came to America and they told me, Jaspreet, I have 2 options. I could either become a doctor or I could become a failure. Those were the only 2 options I had growing up. I knew nothing about investing. I knew nothing about entrepreneurship. I didn't know what real estate investing was. I had never heard the word dividend before. I didn't even heard the word entrepreneurship until I went to college. Then I started reading books. Started reading books about money management and investing and real estate investing. And that blew my mind, because these were concepts that I had never been exposed to before. I had no idea what financial education was. I had no idea that you could change your wealth with what you do with your money. I just assumed that if you got good grades, you're gonna make more money. But this is where your books can show you a whole new world that you've never been exposed to before. And it's a very cost-effective way to start learning. That way you can start earning. Number 3, put that money to work in the markets. I talk a lot about financial education and investor education on this channel, and the reality is the way that most people are gonna build wealth is by investing in money. Most people are not gonna become a business owner. Most people are not gonna inherit the money. Instead, most people are gonna work a job, take some of the money that they invest, and invest this money into something like the stock market. And over time, if you stay consistent with your investments, you will build wealth. That has been a time-tested and proven way for the average person with an average salary to build a lot of wealth. But that requires you to get started. But there are 3 factors that will determine how wealthy you will become. I call it TRM: time, return, and money. This is what's going to determine how wealthy you become. Time is how much time your money is invested for. That means the longer your money is invested, the sooner you start investing, the wealthier you're going to become. We can't go back and start investing 5 years ago, but you can start investing today, which is why it's so important to get started. You never hear people talk about, I wish I started investing later. Everybody says, I wish I started investing just a few years sooner, because it can change how much wealth you're going to build. Number 2 is return. Return is how fast you can grow your money. The faster you can grow your money, the faster you're going to double your money, the faster you're going to get rich. And the way that you get a better rate of return is by investing in your financial education, by investing in your investor education. That's reading books, watching YouTube videos, listening to podcasts, taking classes, and making mistakes. That's the part of the process. You got to make those mistakes, because those mistakes, it's how you learn. I have made so many mistakes. So many mistakes in my career, from business to investing, but I've been fortunate to learn from them. And then of course, money. The more money you invest, the wealthier that you can become, because now you have more money working for you. And so if you want to become wealthy, you have to understand how these three things play a part in one another, but you want to get started with your investing career sooner rather than later. That way you can start building your wealth. Now, let me give you a few options of ideas that you can consider investing in. Now, of course, I'm not telling you what to invest in. I'm not a financial advisor. I'm just a random guy on YouTube, and investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Here are a few popular ETFs that you can consider investing in. They give you broad exposure to the United States economy and the stock market. Number one, VTI. This is an ETF, meaning fund, that gives you exposure to the total stock market. So if you invest in this one fund, well, now you're investing in the total stock market, all the companies that make up the United States economy in the stock market. Number two, SPY. This gives you exposure to the S&P 500, which is the 500 largest companies in the United States stock market. So if you just want to invest in the successful 500 companies, this is one ETF that gives you exposure to that. DIA, this gives you exposure to the Dow Jones, one of the most popular indexes, meaning groups of stocks out there. QQQ, this is an ETF that gives you exposure to the NASDAQ. This is a group of the 100 largest non-financial companies. So these are a lot of tech companies in this fund. NOBL, this is an ETF that gives you exposure to dividend-paying companies, meaning companies that pay you a dividend, pay you a cash check every 3 months just for owning the stocks. But not just that, these are dividend-paying companies in the S&P 500. So you have these 500 largest companies in the stock market. Some of them pay a dividend. This is investing in those. But a little bit more narrow is investing in the companies in the S&P 500 that pay a dividend, that have increased their dividend every year for at least the last 25 years. So it's investing in dividend aristocrats in the S&P 500. Those are companies in the S&P 500 that pay a dividend, that have increased their dividend every year for at least the last 25 years. So if you're interested in cash flow, again, one example. There are so many ETFs out there. This is just one way to get started, as a few examples, and you got to find what's right for you. Now, if you want to be a smarter investor, one of the best things that you can do is just keep up to date with what's happening in the markets. And you can go out and read all the press releases and spend the time doing that. Or the second best thing that you can do is read something like Market Briefs, which is a free financial newsletter that my team at Briefs Media publishes 6 times a week. It's a daily breakdown of what's happening in things like the economy, the stock market, the housing market, the crypto market, and the global economy into a fun and witty and easy to read newsletter. It is completely free, and it's a super fun newsletter. We have hundreds of thousands of investors that read Market Briefs every morning. So if you'd like to join Market Briefs, I got the link for you to join down in the description below. Now here's the key of how you succeed here, because the mistake that so many people make is they take the $1,000, they throw it into one of these ETFs or a different ETF, and then they wait. And now they'll wait to get rich. But that's not how it works. The way that you actually get rich here is by following what I like to call a CPA strategy. Now you might have thought I was going to say ABB, but they go hand in hand. ABB stands for always be buying, but CPA stands for a consistent, passive, and automatic strategy. So the way that I like to do this, because I invest into funds and I invest in individual companies, but when I'm investing passively into funds, I want it to be consistent, passive, and automatic. The way it works is you find a brokerage that allows you to do this. There's a ton of them out there. And then you find a cadence. I do every week. Every Wednesday, money leaves my checkings account and is automatically invested into my portfolio ETFs. It's passive and automatic, meaning it happens no matter what. It happens if the stock market is crashing. It happens if the stock market is booming. It happens if the stock market is not moving. And the reason why is because a lot of people start to panic when markets go down, and then they stop investing. Maybe that's when they start selling. But that's the time you want to be buying, assuming you're buying a good investment. So CPA, you're consistently, passively, automatically buying, but you also want to remember ABB, always be buying. Meaning you buy no matter what. You buy when markets are going up or down. You buy with whoever's in the White House. You buy with whatever's happening in the markets. You just keep buying. That's how you win, and you stay consistent for decades. That's how you build a lot of wealth. Start with that $1,000, and then you keep consistently investing, and that has been a proven system to build wealth, especially if you're investing in a broad basket fund in something like this. This has been proven decade after decade for the last century as a true wealth building strategy. Now, does this mean the stocks always go up? No. We've seen markets go up and down. We've seen 16 recessions in the last century. But despite that, you've seen the stock market go up by around 10% a year on average. And that's enough of a return, that's enough of an R to make you a millionaire, assuming you have enough time to invest. And assuming you have enough money. If you're investing $100 a month, you need about 45 years at the 10%. To become a millionaire. If you invest more money, you need less time. If you have more time, you can invest less money. But the key is just to get started and keep consistently investing your money. As you make more money, keep investing more money, but get started because this is the way to win. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.